Hey folks, welcome back. This is July 18th and you're watching Unusual Option Activity, or 3 at 3. We present unusual option activity that we found that our heat seeker algorithm has ferreted out for us, and we show you exactly what we have sent to our subscribers, and we of course welcome your comments. You can send them in to me at Jon Najarian. That's JONNAJARIAN on Twitter, or any of the socials that you prefer. We're sort of everywhere. So let's get started with today's 3 at 3. We're taking a look at one from just a couple days ago. This would be advanced micro devices. And of course, we told you about the 18,000 calls that traded in here with a weekly expiration of this Friday, July 22nd, and 18,000 options. Since every option is for 100 shares of stock, would be 1.8 million share equivalent. So nearly 2 million shares of an $80 stock. That's a lot of money, folks. Call it $150 million bet. We love following those kinds of bets. We highlight them for you here. And as you can see, it moved up nicely. Advanced micro devices already trading up to almost $84 a share just a little bit ago. And we took some big fat profits in this one already. About 75% of my trade is off because these options expire Friday. Be aware that if you follow us into weekly options that expire in 7 days or less, we are going to be very fast to cut losses. They do happen, folks, as well as take profits, which, knock on wood, also happen. So in this case, these 18,000 call buyers, one of which may have been Paul Pelosi. If you've been reading that Ms. Pelosi, the Speaker of the House's husband, is a very active option trader, and he bought and exercised 20,000 shares worth of NVIDIA, NVDA, as the House is debating whether or not they will provide additional funding for chips. And that's, I'm sure, just a coincidence. But he is obviously a very good investor, and he is worth following. So when Mr. Pelosi's a buyer, I generally like to be a buyer too. So advanced micro devices, folks. This one already a big winner, $3 and about 60 cents to the upside from when we just highlighted it days ago. Next one, well, Lucid. 2 days earlier, I guess, Lucid with $19.30. They bought 7,000 July 29th expiring 21 calls. So 7,000, again, you multiply that times 100 is 700,000 share equivalent. And that one working out very nicely for Lucid as it pops to the upside, better than, I believe, 5% today. Bang. Then we've got EVTL. And I know a lot of you haven't followed this company. It's electric, so I guess green, vertical lift vehicles, like the one you see there. That is an EVTL vertical lift vehicle. They've got an order from a big air provider for charter jets and charter planes over in Europe for 50 of these vertical lift devices. And 13,600 of those calls were bought with the stock at 470. Well, how did that work out? Let me show you. Vertical lift aerospace trading over $5. And look at that turnover. Instead of an average volume of 1 million shares, trading almost 11 million shares by noon today. So that's a lot. That's why we follow these unusual option activities, folks, because many times the people that are buying are also buying shares. That's not uncommon, and it is also completely legit when somebody decides that, hey, let's take a leveraged bet on the trade along with our stock trading desk that is also buying. Well, they're just they're doubling down, so to speak, and maybe quadrupling down if they get that leveraged bet and it pays off like this one has already. Bang. I'd remind you that we have RebelCon 2022 coming your way. That is RebelCon 2022 coming your way. It is in Dallas, Texas. It is at the Four Seasons Resort and Hotel in Los Colinas. I guess just, a part of Dallas or a suburb there. And September 21st through 24th, RebelCon will be in Dallas at that Four Seasons. You can go to marketrebellion.com/Dallas to see all about what we're going to be doing. I can tell you right now, Brian Sullivan is already approved as a speaker at the show from CNBC. September 21st through 24th, that will give us 2 days, double our normal, 2 days of live trading at this event. You'll also get an awful lot of reinforcement of what you do know. Those of you who are not as well versed in options will then be given the opportunity to learn in breakout sessions. It is a fabulous time. I think you'll enjoy it. And I would encourage you to sign up now before all the seats are gone. That is marketrebellion.com/Dallas. All right, let's get rolling to today's unusual option activity. But before we get there, one that I highlighted for you last week, Delta, DAL. You might recall that I was using this as an example of, hey, if it slips much further, we're going to have to be out of this. They were buying the 22nd of July, 30 calls. Delta slipped, and those calls lost 58% of their value in 1 day. But because I had the other calls written against the calls that I owned, well, they also slipped by about 78%, the calls that I sold. So I'm collecting on that side, paying out on the other side. So how did that work out? Well, today Delta rallied rather dramatically. And so on the pop to, what was it? 31.83 just a little bit ago for Delta. Our 30 calls that expire again this Friday popped 126%. The others moved up by 27 cents to 37 cents. So if you subtract 37 from $1.90, you see that we're in the green now. And the trade has expanded to $1.53. I told you I took about half off last week. I'm taking the rest off now. But I wanted you to see exactly why the discipline works and why doing those spreads, whenever I buy an option and sell an option 1-to-1, I have no additional upside risk. And yet I can participate on bounces like what we have here that certainly helped in a trade that didn't work immediately, but over time has worked. There's our friend Scott Wapner on the halftime show, and he's about to see, bang, our 3 at 3 for the day. First one today, FSLY. FSLY. What does Fastly do? Well, as you can see below there, that's from their website, I took it. It says they accelerate your website with the highest rated CDN in the market. So whether you're putting out video or content that people need to see and watch it move, Fastly, FSLY, basically facilitates that. It's a $12.38 stock. They're buying the 13 calls that expire this Friday. So you've already heard me say fast time decay in any weekly option. In fact, for the final 6 weeks of an option's life, that time decay curve really accelerates to the downside, meaning that if you buy an option and the stock doesn't move immediately, you're probably losing money on that. And that's why whenever I buy an option, I'm selling an option against it 1-to-1. As long as I don't ratio it, as long as I do it 1-to-1, I can participate to the upside. I still get the leverage rather than buying the stock at $12.38. If I buy a 10,000 share position in there, instead of that costing me, $120,000, I can buy the call spread and perhaps spend a 20th of that or less. So that's why I do it. So this one, fast time decay, be aware of that. Fastly, it has extremely fast time decay. Starbucks, well, you know what they do. And you know in the summer, people aren't as hot on hot coffee. But that, of course, is not a hot coffee. That's more like a milkshake. And Starbucks makes a fortune on these folks. So I see bullish activity in Starbucks with the stock at 81.31. They're buying 83 calls. Again, they expire this Friday, the 22nd of July. So what do you need to know? Fast time decay. I'm putting on a 1-to-1 spread, buying the 81s, selling upside calls against it. And I'll be in that 1-to-1 spread probably till Wednesday or even Thursday this week. Rarely do I ever ride these into the expiration. What would be an example of a time that I would? Well, I'll give you an example. I might ride it into expiration if indeed both sides go deep in the money, for instance. Let's say that I own the 81 calls rather, and I've sold the 83 calls as an example. If I had done that, that's 2-point wide spread. Hopefully I paid somewhere in the neighborhood of 55 cents or less for that. If I did that spread and the stock pops to 84, yeah, I might just let it go. Why trade out of it? Because the long in the money call, the 81 call would be worth $3 at that expiration at $84 a share. The right to buy it at 81 would be worth $3. What would the right to buy it at 83 be worth? 1. Subtract 1 from 3. It is indeed right at that maximum profit $2 spread, and I didn't have to trade out of it. That would be an example of why I might ride it into expiration. But what I will always do with short-term options like this is put on a 1-to-1 spread. That's the way I trade them, folks. Third and final of today's 3 at 3. How we follow the smart money. Got to be aware of this. Tomorrow, my brother Pete and Ryan Mastro at the market close on the 19th, we'll be talking about how we follow the smart money. It's a free webinar. I would encourage you to sign up at marketrebellion.com. Completely free. You get to secure your seat, listen to my brother Pete and Ryan describe how they trade and how they follow the smart money. Always worthwhile. It's free. Check it out tomorrow on the market close. And you know what? If you can't make it live at 4, maybe you've got a job, maybe you've got a Zoom call, whatever it might be, we will send you a copy of their discussion with the slides so that you can watch it on your smart device. You can watch it on a tablet, at home on your computer. Doesn't matter. We'll send you that. And again, there's no cost to any of that. Check it out, marketrebellion.com. All right. Third and final of today's 3 at 3 is Capital One, COF, bullish puts. I'm sorry, bearish puts. I'm so used to saying bullish. Bearish puts. Why? Because a put is the right to sell something, folks. So if somebody's buying a lot of puts, that is the right to sell that particular asset. In this case, the 105 puts in August. They're buying those puts with this stock trading at 111.50, thereabouts. So $6 out of the money. Do I want to buy those? I want to buy more at the money and sell underneath the market another put against it. Again, same as the calls. As long as I do that one-to-one, I have no downside risk. I have addressed time decay, and I have taken less capital to hold that position than I would if I was just naked long a put. So Capital One negative, there you see it. Is it because Capital One has some folks that might have more defaults than other credit cards? I don't know. I do know they have earnings, I believe, the 21st, just 3 days from now. So we might not have to wait too long to find out. And the fact that they bought August, not expiring July, tells me maybe they're looking for a longer setup to the downside. Bang. All right, folks, that's going to do it for us today. I would encourage you to check out marketrebellion.com/get started for more. You can learn about trading stock, options, or crypto. marketrebellion.com/get started. You can also see about our mentoring programs and our group. So we have mentoring and coaching. Coaching is in groups, more of a private lesson, if that's what you desire, is more like mentoring. And we've got that available too. Check it out at marketrebellion.com/get started. That's it. I hope you had a great time listening and watching, and I hope you join us tomorrow. I'll see you then.